Welcome to Get Started Investing. In this podcast, we cover all the basics that you need to start your investing journey. We unpack all the jargon, the confusing bits. Hear your investing stories with the goal of making investing less intimidating. And we want to have a good time along the way. So, my name is Bryce, and as always, I'm joined by my equity mate, Ren. How's it going?
I'm very good, Bryce. Very excited for this episode. We have a philosophy here that we want to try and break down the barriers to investing and, make it all very understandable. And we're joined by a guest who has a similar philosophy.
Yes. Phil Muscatello, welcome to the show.
G'day. Thank you very much. I'm really excited. Can I say equity mates? Can I do?
Absolutely.
Equity mates.
I think that might be the first guest we've had that's done it. We might have to clip.
I was just very excited.
We might have to clip that and use it in our intro.
That was actually better than I do it.
Oh, that's you. It's because I'm half Italian, so, I know the accent.
So, Phil, you are a producer, host, owner of Shares for Beginners here in
correct.
Australia,
Mm-hmm.
Stocks for Beginners over in the States.
Yes.
You've got another few podcasts in the stable.
I've got Equity ASA with the Australian Shareholders Association, and I also have AGM Watch, where I talk to company monitors from the Shareholders Association about upcoming AGMs, voting intentions, whether they like the directors or not, whether they like the company's strategies moving forward. And there's a couple of other ones that I'm just keeping under wraps at the moment,
Nice.
I think we've all
Nice.
got all big media plans.
So the structure of this episode is going to be a bit of an open-ended conversation. We're going to find out a bit about you and your investing journey, and likewise, you're going to find out a bit about our investing journey.
Oh, I've got some questions for you.
I'm used to being on this side of the question, but and then we're going to release it across both feeds, and looking forward to it. So should we start by pinning down Phil and finding out about him?
Let's do it, yeah. This is a more comfortable situation, asking the questions. So let's start there.
Okay. Yeah, so it's uncomfortable for me then.
So I guess we just heard 4 podcasts at the moment, but I guess if you can take us back, why did you start Shares for Beginners, and what was the what's been the journey?
I've got a long background in media production and radio. And I think it was just, I was interested in podcasts because I did start working on podcasts a few years ago. I worked with Carl Kruszelnicki on one of his podcasts, and then with a couple of other podcasts, just throwing some ideas around. And it was really basically the thing was that I thought, okay, it's something that I can do. I've never been a presenter, so I've always been behind the scenes. So getting in front of the microphone has been an interesting part of it as well. And I've always been interested in investing in the share market as well. I've done it for a very long time, poorly, I've got to say, most of the time. And I don't know, it was almost like coming to me in a dream. One day I just said, Shares for Beginners. That's a great name. And then I started getting some guests on, and it just took off really, really quickly. So, I think at the first few episodes, I was really lucky actually with the first episode where I got this local financial planner who was just a great person at explaining things, and it's still the most downloaded episode of the podcast. I think it annoys him as well because he doesn't want new clients, so he's still gets inquiries all the time. Sorry about that, Rob.
So just to clarify, Phil, you're not an expert investor?
Not at all, no, not by any means. Well, I thought I was an expert investor, like we all do. Isn't it the Dunning-Kruger effect?
It is. So similar to Ren and I, sounds like you started the show purely for your own investing journey, really, and to get access to the bright minds in the investment landscape, and I guess help others on their investing journey. So, I was hoping
what I wanted to do was learn myself. I mean, my slogan, I guess, is "Let's learn together," and
nice.
I just want to learn myself and share that experience with listeners as well.
Yeah, nice.
So, when did you start the first podcast?
February 11. 2 years ago.
2 years ago. So 2 years later,
yes,
3 more podcasts in the stable.
Yes.
What's the journey been, and maybe what are some of the biggest lessons you've learned from the experts you've spoken to?
Oh God, there's so many lessons. But what's been amazing to me is how quickly it's gone and how accepted we are. I think all of us as podcasters in the industry. So many people are just happy to come on and share and talk. And I think they like talking in a natural way rather than having to do a formal presentation. You know, they're so used to doing the PowerPoints and then standing up and being very formal and wearing the suit and putting out the glossy brochures. And I think what we both tend to do is we're very natural with people and we get them talking naturally. So there's been a lot of lessons. Oh, I got my list here. One of the main things, I guess, is that to think long term about investing. I've always had this idea, and I've made so many mistakes over the years because I thought that stock market investing was a little bit like a casino, where you go in, you make a gain, you bank that gain, and then move on to the next thing. And really, that's a mug's game. And the main thing is about the long-term nature of investing. I learned a lot from going to Australian shareholders meetings where there's a lot of very elderly people talking about their investment portfolios. And one person told me that it was like growing a garden, and that you just tend the garden and you look at the plants that you like and you plant the plants that you like. Take out the weeds, maybe once a year go out and take out all the weeds, which are underperforming stocks. And it's been a great analogy. And I think that's the main thing that I've really picked up. And I'm hoping, because as you know, the audience for podcasts is a lot younger than that. And I just really hope that I can share this with as many young people as possible, that it's a long-term journey and not to think that they can just go in. Because I think a lot of listeners, they start thinking about stocks and shares because they've suddenly heard about some item of news and they've heard about Tesla, or they've learned about, Afterpay.
Yeah.
And it's like, oh, how do I get in on this? And they have to be shown that, no, there is another way of investing.
I like that analogy, the gardening one.
Yeah.
As someone who does not have a green thumb, hopefully I can be a better investor than I am a gardener.
Yeah, that's right.
So I guess, has there been, we've spoken about guests, but do you have any coming up in the pipeline for 2021 that you're really excited to speak with?
Oh, okay. Well, I'm talking to Scott Phillips tomorrow. I know we're going to be out of sync with the timings and that. And again, he's another one that's great in terms of talking about. We're going to be talking about his don'ts. He's got five don'ts. I can't remember them off the hand, but don't trade too often, I think, is one of the main things. So we're going to be covering that. One of the things I want to cover with a couple of guests. Now, let me think. Who have I got coming up? Because I'm getting them. There's so many now that I'm getting. Kylie Purcell from Finder. Do you know Kylie? Yeah. Who's a great advocate for investors and for investor education. We're going to be looking at how not to lose money.
Nice.
I just think that that's just something, because I remember when I first started the podcast, that was one of the things. How do you not lose money? And I've lost sight of that. This year I'm coming back to that in a big way. Even if the answer is you're going to lose money, how do you mitigate against that risk and protect yourself against that?
Nice.
Nice. Well, I think we've grilled Phil enough, at least for the moment. So should we flip it around and give you a chance?
Yeah, I'll give you a chance. I wanted to talk about when we had our chat previously before this episode. I think you were talking about not investing solely on the ASX.
Yeah.
Tell us about that.
Well, that pretty much sums it up.
The Australian stock market is 2% of the global market. Mm-hmm. For every great Australian company I can name, well, with a few exceptions, but for most great Australian companies, I can name an even better international equivalent. Yeah. And for when Bryce and I started investing, Bryce started a lot earlier than I did, but international shares were difficult. They were really expensive if you were going through a ComSec, but most of the time you just couldn't access most markets. And what we've seen over the last even just 5 years is accessibility and cost have come down so much, and it's now just as easy to buy an American share or a European share as it is an Australian share. And so put those two things together, it's no more difficult to buy outside of Australia, and the quality of the companies in many cases is better.
Yeah.
it just for us then feels like a no-brainer. And then I think the third thing is really if we look around, in this room, what we're using, but more generally what we use in our lives.
Australian microphones.
True. Not publicly listed though.
No.
But it's Apple computers. We search on Google. We use like Microsoft products.
Yep.
So for us, it's just we want to invest in what we know, and more what we know are overseas listed companies.
And how would you look at it? I mean, you can do it with directly or ETFs or traces. Is that how it's pronounced? Traces? Trackers?
Don't know.
You don't know traces?
No.
Oh,
No.
talk to
There you go.
Sharks.
Okay.
You can actually, there are stocks on the Australian share market that you can actually buy directly on the market, and they represent Apple or Tesla.
Yeah, right.
or
Right,
whatever.
okay.
Yeah.
I think
they're interesting product, yeah.
one more point on that though before we go into the how is you look at what's going on in in different economies around the world. It's a great way to diversify your risk. If you're solely invested in Australia, you're relying on what government decisions, the macroeconomic environment here, and should the market tank, then you have nothing else that is going to sort of, I guess, net out that drop in the market if other countries are performing well. So spreading your risk around the world is a great way to diversify a portfolio. I mean, Ren's in Europe, Croatia, wants to get in Iran.
A lot of big things happening in the Ukrainian stock market.
Emerging markets, par excellence.
I think that's an important thing to remember is, as Ren said, 2% of the global stock market is Australia.
Yeah.
But think big, and it's never been easier to do so. Through ETFs, as you said, Phil, and you can buy them domestically. You don't have to, you don't have to buy them in America or in Ukraine. You can get access to many different, countries just through ETFs listed on the Australian Stock Exchange. And then once you're feeling a bit more adventurous, find those brokers that do allow you to buy overseas and buy directly in. You do then have to think about currency and that sort of stuff. But certainly worth thinking about.
What about you? Do you invest overseas?
Just basically S&P 500 ETF is the main thing at the moment. Again, that's the thing that doing this podcast, it scared me off direct investing. I'm just about all ETFs now. And then I've got a few tiny stock picks, like the bulk of the portfolio is ETFs. And then I'm talking about 1% of my portfolio in individual stocks just to manage that risk.
And I mean, there's absolutely nothing wrong with that. I think, a lot of new beginner investors come into the market or their journey and think that they need to come and pick individual stocks and try those speccers and just throw cash at them. But if you think about the average return for the stock market over the last 40 years or whatever has been roughly 10% or thereabouts. There is nothing wrong with a 10% return year on year. Like you don't have to, and many managers, professional managers don't even beat that. So
that's right. Yeah.
To say that, there's something wrong with just having a portfolio of ETFs is wrong.
Yeah.
I mean, we interviewed Lars Kroyer, who was over in London, and he said the only portfolio you need is the all-world MSCI ETF.
That's right, yeah.
And a couple of bonds.
I don't even think it was that.
Or
was
some
it?
sort
It
of
was
fixed,
just
tiny
that.
fixed
Okay,
income.
Yeah.
And just put all your money into the all-world index, 8,500 stocks or something that it tracked.
Yeah.
And
that's it.
That's it.
Yeah.
Let it go.
Let's come back to that because diversification's a big thing. But I didn't ask about you guys and, how it all came about.
Well, equity mates.
I believe that's what we were talking about.
So similar to you, Phil, Alec and I met at a university and, soon realised that we both had a pretty strong interest in business and finance and that sort of stuff. And I'd been investing for a while and Alec was, I guess, smart enough and clued in to know that he should be doing something more with his money and made his first investment. But that sort of led to us wanting to find more resources in the investing space for beginners. And at the time, there were no real podcasts that were Australian focused and, spoke to a beginner level. So we used it as an excuse to go and speak to fund managers and CEOs knocking on the doors. Hey, we've got a big podcast. Didn't have
it's
any
all about
listeners.
us. It's not about the listeners.
It's easy to say Australia's biggest when there's not many competitors.
Yeah.
And really just from there, it has grown and we've learnt a lot. And I think have been able to create content that is sort of relatable to a lot of other people on their investing journey. And we've, probably struck it lucky with what's happened over the past couple of years and what's gone on in the States with the rise of the retail investor. But still, I think this market is still underserved with this sort of stuff. So
the rise of the retail investor and the rise of podcasts as a entertainment form. Yeah.
I don't know about you guys, but one of the things for me, when I first started, I was thinking, what am I going to do for content? I was really worried.
This is the number one question my dad asked me all the time.
I was never concerned because sometimes you just can't stop Ren talking.
I think the thing for us, and this is when Dad is like, how are you going to do more shows? Like, you don't have enough content, blah blah blah. It's like, it's just incredibly interesting investing. And investing isn't a study of finance. Like, there's obviously financial aspects, but you're investing in companies that are doing all these really interesting things, working on all these big problems across all these different industries. And the best skill in being an investor is being intensely curious. And, Bryce and I have done deep dives on things like the renewable energy industry. I'm fascinated by the waste industry, like an industry that you wouldn't otherwise think of. And it's just, that's the thing about investing. And that's
Are you a bingo bull?
No, bingo doesn't have a great reputation, and I'm not going to go too far but I think there's, again, back to our earlier point around Australian companies compared to their overseas peers. In Australia, you're looking at Bingo or Cleanaway. Cleanaway is an interesting company in that, but you compare that to the Suez's and the Veolias in Europe or the waste management in the US, just bigger companies with more assets, more infrastructure, and
more people, more power.
But this is another point for the get started. Like, if you are just, a lot of people will often think that they need to know everything before starting out. And through your podcast, through our podcast, we've proven that it's a consistent journey that is lifelong. I would challenge you to find a professional investor who has gone, I know it all, and I'm just, you know what I mean? They're going into work every single day, and what Alec was saying, finding out more and more information that is curious to them, and they continue digging and refining their strategy and learning new ways to do things better.
We just interviewed an expert who we've had on the show a few times, and he was telling us about 5 companies he's found recently and he was like, they're all owned by like reclusive European billionaires, and like he found them all just because he was just doing heaps of reading about these families, reading about these companies in Europe, and they were all like really compelling stories, all with really interesting things. But he just read, and he read, and he read, and he read, and he just stumbled across these things.
I think you've had Doug Morris on, haven't you, from ShareSite?
Yes.
Yeah.
And one of the great things that he said is just to learn, when you want to learn, is to buy a share, just buy a company, someone that he talked about his first one being Disney, because he was a school kid and it was a school project, and of course, Disney, I love Disney. But that's a great bit of advice where you just get your $500 together, buy Woolworths, and then if that's a company that you know or are interested in, and then do as much research as possible on that particular company and really focus on it, because unless you've got real money on the line, you're not going to do it.
Absolutely. Absolutely.
I want to bring it back for a second, because I'm sure there are people listening who are like, I don't want to do all this reading. Like, I've got other things that I'm interested in. And I think for those people, there's nothing wrong with then buying an index and not thinking about investing, not reading about it. Like, you don't have to do all that reading because ETFs and index funds are there.
Know yourself.
Yes.
That's another thing. Know yourself. Are you going to be interested? Are you going to be wanting to look at company reports? Are you going to want to be doing all the research? Or are you going to go on this journey and go, hang on, I'm not really interested in that, but now I know about ETFs, and there is a way of sitting back, drinking Mai Tais and not even worrying about my portfolio.
Or if you've got a 9-to-5 job or a you work longer hours than 9 to 5, and you just can't. You don't have the mental bandwidth to think of anything else,
or just even the interest.
You can still invest.
So Phil, you mentioned then knowing yourself. You also said that you started out investing in individual stocks, and now you're in just ETFs.
Mm-hmm.
Is that because you've found yourself?
I found how shit scared I am. Oh, am I allowed to say that? Yeah. I think, again, this is part of the journey, is sort of stripping back to the basics again and going, okay, ETFs is long-term and you don't have to worry about it. And then just at the side, start chipping away, like I said, 1% in each individual shareholding that I'm doing my own research in and trying to build my own conviction in, and also a bit of technical. I mean, I know a lot of people sort of don't like technical analysis, but I can see some of the theory behind it. So at this stage, I'm more looking at the technicals rather than the fundamentals of what I'm buying. Yeah. With moving averages crossing over. Very simple technical analysis, you know.
So in terms of portfolio construction, that is what we call satellite and core portfolio.
Yes.
We've spoken about it on the show, where you build a portfolio known as the core, which is potentially 80% of your total investment that is passive, and you're just building a portfolio of ETFs, potentially listed investment companies, however you kind of build that just sort of passive stream of money going in at a regular interval. And then your satellite is those smaller individual stocks that you might be taking a little bit of a punt on, or hoping that you're going to get an outsized return, and that might be 10% of your portfolio. So that's one way that you can manage your risk. And I would encourage beginners to sort of have a look at that and think about that core satellite approach. Ren and I both sort of have that philosophy, same as you, Phil. Yeah, build out the ETFs and then throw heap of money at Bitcoin.
What's your Bryce has a core satellite and crypto strategy. What's your core and satellite breakdown? Like, what percentage would you do for each?
Yeah, I try to stick to... I'm trying to build towards the 80-20.
Okay.
2 years ago, I took a very similar approach. I was very heavy individual stocks. And through this, have realized that there's, building up that really long-term focus with that core takes out, A, a lot of stress of having to find individual stocks, B, losing less money, and C, you just can chip away. So I reckon I'm close to the 80-20.
Wow.
Yeah, but you still got some work to do, because I keep buying the satellite. That's the thing.
Because that's most fun, isn't it?
Because that's the fun part, Like, damn it. What's yours?
I'll probably be 50-50, I think. Yeah. But I think in my satellite approach, I'm definitely not trying to do technical analysis. No offense to you, Phil, or anyone.
It's a very basic form of technical analysis. I mean, that can be turned into a complete dark art. But
yeah. I mean, a lot of people have made a lot of money from it, but I will never be one of them. But in my satellite portfolio, it's individual stocks, but it's really trying to be those just the best quality businesses around the world. Those unbelievable businesses that will be able to take their profits, reinvest them in the business, grow, and for decades to come. Yeah.
So this is an interesting question, and we got this on the show because we had built a portfolio of the apples.
If I can add to the portfolio idea as well, but
yeah, absolutely.
I just don't want to forget about this. Yeah,
sure. The question that we get often then is, if you're and you're talking about the Apples, the Microsofts, the Spotifys, etc. Why
one of the three are in? Yeah,
one of the three. Why not buy just an ETF that has all the best companies in the world?
A couple of reasons. One, because an ETF also has a whole bunch of companies that I'm not interested in.
Yep.
So in this satellite approach, it's really about getting exposure just to the things I want to get to. But don't get me wrong, like I own Microsoft. That was the one of the three in the satellite. But I also own an S&P 500 ETF. And so there's overlap there, but I'm comfortable with that overlap because it's like I want more exposure to Microsoft.
Yeah.
I just wanted to say, in terms of diversification, and another thing that I've learned is about asset allocation, and not just being invested in equities. By having some sort of exposure to bonds, having some exposure to gold, real estate investment trusts. And, if you're going to a financial planner, they're not going to put all your money into equities. And it's also going to depend on what your stage is in life. If you're in your 20s, you're going to be all equities. But as you get older, you want to start de-risking and start going into safer things like bonds, even though they're not returning. I know bonds are not returning much at all, but they provide a ballast to put your portfolio, as does gold, as possibly crypto will, but it hasn't been stress tested. I was just having a chat with Jordan Alicio from the Perth Mint, who was a recent guest, and we were talking about, gold and Bitcoin, what are the differences, and he says he's quite bullish on Bitcoin, but it hasn't been stress tested in an actual catastrophe like gold has for 6,000 years or more.
If the market drop in March wasn't a catastrophe, I would like to know what they're expecting.
It wasn't like the GFC. The GFC was like the banking system was on the verge of collapse. That's a catastrophe. Yeah.
Bitcoin fell then, didn't it?
When?
In March 2020.
Yes.
Yeah.
Yeah.
It was correlated with equities, which people were surprised about.
Yeah.
But it's not, and now it's correlated with equities again. Both are running hot.
Yeah.
But getting back to that diversification, I think you really got to understand the true diversification is not just being invested in equities. It's maybe having some of these other asset classes, and it's worthwhile having a look at these. And you can invest in these asset classes through ETFs as well.
Yeah.
Another one of my guests was Graham Hand from First Links. Have you had Graham on?
No.
I saw him do a presentation. I just thought, get him on the podcast and we'll talk about it, where he put together an ETF portfolio that was based on the Future Fund.
Okay.
So really you can just mimic what the Future Fund is doing.
And for those that are unaware of what the Future Fund is,
yes,
what is it?
The Future Fund is I should know the definition of it. It's run by Peter Costello.
Yeah, it's an
treasurer.
Australian government.
Kind of
it's like a sovereign wealth.
A sovereign wealth
fund.
fund. Yeah. I think it's there to pay for the superannuation for the public service. I think
Is it?
Yeah.
I thought
overall.
It was.
I could be wrong.
It's massive.
Yeah.
Yeah. And pension, that sort of jazz.
No, I think it's just isn't it just for like the future? Because there's like a separate super fund for the public service.
Yeah.
Independently managed sovereign wealth fund established in 2006 to strengthen Australian government's long-term financial position.
Yeah, just if we ever want to draw on it, I think is the idea. But then you never do, because it's like you're the government that ran the future fund.
Anyway, if anyone's interested, I've got a blog post and an episode where he discusses that.
Nice.
But the interesting thing about it is how much the future fund is in cash at the moment.
Yes. Oh, well, that was going to be my next question, is how are you thinking about cash in this environment as an asset class? Are you all in 100% invested? Do you have some cash on the side?
No, I've got some cash on the side, and that's what I'm using to go into those little satellite holdings in the portfolio. Yeah. Not a great deal of cash, I have to say. But I do have quite a lot in a bond ETF. In an Australian government bond ETF. I'm a bit older than you guys. I think the having the ballast for me,
you're all about preserving cash.
In my twilight years, I want to preserve. And I know it's only giving about 1% or just under 1%, but, it's preservation for me of the capital. And it's there as a ballast. And if we get another, I was too scared last year to sort of go all back in the share market. So I sat in the bonds, and that just sort of sat there, and it held up the strength of my portfolio. But then I didn't really participate in the uptick since then.
So we've spoken a little bit about what you can invest in. That there's a bunch of different assets out there. All of which you can actually access through the stock market, I guess. You can buy property through real estate investment trusts. You can buy gold through, gold ETFs.
ETFs,
So that's what you can invest in. I want to ask you about when. Have you spoken to your guests much about, how people should be investing, things like dollar cost averaging and stuff like that?
Very much so. Yeah, just and there's a lot of services now. Obviously, your raises and your spaceship and so forth. Perla is a new one. Have you heard of Perla?
Yeah.
You met the Perla guys?
No,
Yeah.
they've chosen an unfortunate name because wasn't that right-wing social media?
Parler.
That was Parler.
Yeah. No, they've done a lot of social media posting about that recently to try and distance themselves. No, I think they're using the Aussie term of Perla. She's a Perla, mate, you know. It's so easy now to do that, where you can just sort of put in a little bit of money each week and just keep it there. But you've got to, this is it, that's the psychology of it as well. When you have your real money on the line and you see markets diving, that's when people sell. You know, I'm sure you've seen those memes on Twitter, you know, where you see a graph and it's sort of like buy as the graph's going up, and then sell as you go down, and it's what people do.
Yeah.
Well,
it's having the strength to hold against that, and that's another part of the learning. Sorry.
One thing I was really pleasantly surprised with in March of last year, when the markets really started to fall, the Equity Mates community there was no panic selling. And in our Facebook discussion group, there was a lot of, when's the right time to buy the dip, but it wasn't like, it was chaotic. The world was chaotic, but the Facebook group was really calm, which I thought was pleasing. And I definitely think people learnt from 2008. I mean, we were growing up then, and what was a catastrophic moment turned into an incredible buying opportunity. And so I think our generation saw that and learnt from that.
Gemma Dale, Gemma from Your Wealth podcast at NAB Trade. I've been on her podcast, she's been on mine, and we were having a chat about it. And she was showing the data, because they've got data on what the brokerage accounts are buying, and she was saying that a lot of young people were making very sensible decisions and buying banks and buying Woolies and buying, the big name Australian stocks.
There you go.
During that time, and they were using it as a buying opportunity. Unfortunately, I didn't. It's all learning. Well, I just wanted to talk about Claude Walker from A Rich Life as well.
Okay, yeah.
Sure.
Yeah.
He's active on Twitter.
Yeah.
We haven't
on
actually
Ozbiz.
spoken to him. Yeah.
You haven't spoken to him?
No,
get
not
him on.
yet.
He's great.
Yeah.
But one of his great things, it's become a mantra for me. I'm going to write a song about it. Match your risk to your experience.
You're going to write a song?
Yeah. I've decided I've got to do a Twitter. I'm working on a death metal. I had a guest on in the US version, Enrique Abeda, and he's got a tattoo magazine and a heavy metal magazine. He's a Wall Street guy, but he's now buying up digital assets. And his thing is value investing is a death cult. That's
right.
Unless I'm making a death metal song about that. Hopefully.
There you go. So album release 2022 maybe.
Yeah, that's right. No, I think the TikTok video thing, that's a strange, amazing thing, isn't it?
Yeah.
Can I ask you about Bitcoin? Because I was having a conversation with a guy last night who was evangelizing to me a bit about Bitcoin. And I've kind of avoided it because even though, I've had it explained to me, I've talked to Fred Shabester about it, where he's trying to explain it. Again, they went through how it works. I think you've got to just accept that it works. You don't want to get tied up in the technical details of Bitcoin. But he believes, and I would be interested to know your guys' view, that there is long-term growth and wealth being created in Bitcoin as we speak, even at the prices that it is at today.
Yeah, look, I'm absolutely no expert on this topic.
Oh, I thought you were going to say you're absolutely bullish.
But I am very bullish on where it can go. I mean, I'm following a lot of people, and this, is pretty, I guess, could be biased given some of the rabbit holes I've gone down, but I've equally tried to find the alternative argument. But a lot of good investors and very smart people that I've been following for a while have put forward some pretty convincing arguments as to why this may be. I'm not saying that it will be, and they're not saying it will be either, but why it has a strong probability of becoming an asset class that is worth a lot more than it is today. Mm-hmm. And given that probability, it's something that I want to have some sort of exposure to, because if it does take off and go to the places that these guys are suggesting, it could be quite significant. that's where it comes down to that, what you just said in terms of, your risk needs to be matching your experience. We talk about the 80-20 core portfolio, and this is an even smaller portion of that 80-20. It'd be stupid to go and put in 20% of my portfolio into an asset class that I don't really know anywhere near enough about to make those sort of informed decisions. But for me, it's I want to be in it, and I can understand how these prices move. We're down to USD 30, and I think the highest I got in was 46, and I've been in a lot lower at this, so this might be an opportunity to buy some more. I don't know. Personal, in my opinion only. Don't listen to me.
Yeah. This is not a...
This is, but it's cooled, and look, if it goes to where I think it's going to go, then good time to get in.
So in terms of what you guys have learnt, for me, talking to CEOs of companies and then digging deep into a particular company and suddenly realising what's going on and how a particular company, industry, sector works has been so fascinating, because you're really getting through the whole of capitalism and seeing how it works. Have you got an example of someone that you've met and talked to and learned so much about from their particular industry?
I mean, we have. There's a bunch. Two immediately come to mind. One wasn't a CEO, but we actually spoke to Malcolm Turnbull. And we had a chat to him about his years as an investor. So after he was a lawyer, before he was a politician, he started an investment bank, did a whole bunch of interesting stuff, including just some of the stories that he had. He was investing in like Soviet gold mines and stuff like that. And just a really fascinating story about how this guy sort of came into finance with no financial background and just did some pretty amazing things. So in terms of guests, and obviously the fact that he was a prime minister was pretty cool. But in terms of guests where we've really had a better understanding of an industry, and I've walked away from that conversation thinking differently about a company than I walked in. We spoke to the deputy CEO of Booktopia recently, and honestly, we've spoken to him now, so I can say it, I guess. I walked in thinking Booktopia is a company that's listing because it's about to get disrupted by Amazon, and e-readers are coming in and they're selling physical books. Like they're a relic in some ways. Yeah. But they're a more interesting company than I thought, and they're more technology led than I thought. And whilst I'm a Kindle user and I rarely buy physical books anymore, I walked away thinking that there might actually be something here. I didn't invest, and I don't think I will, but just a really interesting way to think about a company that I didn't think much of.
Did they list recently? Is that what?
Yeah, they listed end of last year.
Yeah. Oh, okay. Yeah.
What about you? Anyone's from you?
No, I think what you've kind of covered is, I think we want to speak to more CEOs this year. That's sort of one of our ambitions is, almost every single fund manager who we've interviewed have said that one of the most important parts of their research process is to understand management. The next question is then, okay, well, how do you do that? And they go, well, we get on a plane and go and speak to the management. Yeah. As a retail investor, you just can't do that. It's super hard to actually understand the management. And so we're going to try and speak to more CEOs, CFOs, COOs, founders, you name it, to actually try and get... It's good,
isn't it? Yeah. It's really good experience in talking to people.
Yeah, more exposure to the managers of these companies so that we can, I think, help our audience and the podcast community more broadly to get closer to some of these people. Because...
Do you think listeners are interested in this kind of thing? Because I've kind of experimented a little bit just to, try it out. And I've talked to a few CEOs and a CTO of Hazer about hydrogen technology and stuff. And
I think so. If it's framed in the right way, then there's certainly some value to be.
If anyone's listening and wants to let us know if they're interested, please let us know.
I think if you, especially if you give people a chance to share the questions that they have, that then becomes a really compelling thing for listeners to get a chance to ask questions that they wouldn't otherwise get to ask. But I imagine that if any of us had Nick Molnar from Afterpay on our shows, it would be our best rating episode, because so many people love Afterpay. It would outdo the Malcolm Turnbull episode. I'd bet my whole share portfolio on it. Absolutely. So I think if it's the right CEO and people feel like they have a chance to ask the questions, then it can be as Bryce said, something that previously hasn't
Yeah.
been available for retail investors.
I've spoken with Michael Idle from OpenPay, which is another buy now, pay later stock. And I just wonder why Afterpay is the one that's done it, because it's a simple business. There's nothing to it. Maybe it's marketing. So why, I guess my question is, why isn't OpenPay performing like an Afterpay or any of the other?
First to market, first mover.
No, you see, this annoys me. They weren't first to market. Zip was founded a year before them and listed a year before them. But I think it's just they were not the first mover, but they were the fastest mover, and they've got more customers, more retailers, other than FlexiPay, which is now Hum, but that's a legacy business. But yeah, I think, there's always one hot stock that leads the trend. Tesla leads the electric car trend and dragged Workhorse, Neo, Nikola before it all fell apart along with them. And I think that's, Amazon drives the online retail trend, but there's a whole lot of online retailers that get swept up in its wake. I think it's probably psychological for people to all congregate around one. But
and I think it's also becomes a name that's used. Like it's the brand itself, and so it's used, and it's got this critical mass of people who want to use it and recognise the name, and to them that's what they associate with buying now and paying later.
But I guess forget the investing side. Like when you're just walking around the shops or whatever, I know personally, I definitely noticed Afterpay before I noticed any of the other ones. I mean, was that the same for you?
Yeah, definitely. Yeah.
Yeah. So I think that's probably part of the reason why as well. Like in our minds, even though they weren't actually the first founded, they were the first that we realised were, stuck on shop windows and stuff like that. Yeah.
Well, Phil, we might have to leave it there.
It's great talking to you guys.
It was
great
good
meeting.
fun. I'm sure we've got a few more podcasts together in the barrel. It sounds like there's a lot more to talk about and a lot more to discuss. But it's been great having you on Equity Mates.
Oh, thank you for the invitation, and thank you for coming on Shares for Beginners as well, because this is a double simulcast
double release.
World first. For our community, I'm sure similar for Phil's, but this podcast, Get Started Investing, is all about helping the beginner investor and breaking down the barriers. So one of the best ways to work out what those big hurdles are is to actually hear directly from you guys. So please, as a beginner, if you are on your journey, we would love to hear from you and your story. Come on the show and we can sort of help break down those barriers and have a good conversation, just like we have had today. So hit us up at equitymates.com/contact. Leave your details, a voice message. Ren's been coding on our website. You can now leave a voice message and we will get in touch. But Phil, thank you as always. It's been fun.
Thank you.
Good luck with
Thanks, Bryce. Thanks,
stocks
Alex.
For beginners, shares for beginners, and looking forward to seeing what those two new
those secret podcasts.
Two secret podcasts and the album debuts. So
I'll be dropping anytime.
But yeah, looking forward to seeing how it all goes, and thank you.
Thank you. Thanks very much, guys, and thanks for coming on Shares for Beginners as well. And remember, we've both got Facebook groups as well, and if you want to ask questions and continue the discussion, they're available as well at Shares for Beginners and at
Equity Mates.
Equity Mates discussion group.
Yeah.
Nice one.